It's important to find a voice of reason that can guide you through these volatile times. Phil Grande and philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
If you want to invest your money and grow your wealth, just listen to Phil Grande.
Hi, I'm Phil Grande, philsgang.com. There's many reasons to listen to a radio show, but I think to listen to my show, you get the truth, you get clarity, and you get great information.
No matter what level of investor you are, Phil's Gang strategies for investing are designed to put you on the path to success.
You know what? Most of all, it's fun. philsgang.com. Clarity, good information, and fun.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grande and philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome. My name is Phil Grande. Every afternoon it's time to get together and we chat. And we just visit and talk about what's on my mind. And if you have any questions, fire away and ask, and I'll try to answer them for you. Okay, everyone's talking about gold today. What's going on with gold? That's the big story, but it's not the big story. It's not the big story. I'll tell you what the big story is in a minute, but listen to this nonsense here again. I just can't believe they keep coming out and saying this garbage.
Look at where we are today. We have an economy that, if you look through the sort of distortions in Q1 GDP. You've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid.
Somebody told a lie one day.
Labor market strong. What are you, nuts? The labor market is getting terrible. It's getting worse and worse, not strong. I don't understand where he's getting his information from. This guy is nuts. But anyways, you never believe Paul what he says. Always follow the money. Now let's go back to gold for a moment, because everybody's interested in gold. What's going on with gold? Well, everybody's saying, hey, everything's fine now. There's no more inflation. The tariffs are all done with now. They're all settled. Are you nuts? I mean, that's what they're saying. And that's why gold's going down today. Everything's okay now. There's nothing to worry about. Nothing to worry about when you got interest rates going up. The treasuries went up 4.5%. The 20-year went up almost 5%, 4.92. 30 years up 4.90. Are they nuts? And so this is crazy. So the real top story is that these tourist traders who lose 80 to 90% of their money, okay, have joined the TV jibber jabbers in celebrating this tariff victory. But there's no victory. It's only a pause. It's a letter of intent, as I told you all week. What are you, nuts? Not until there's a solid deal in writing signed is there a victory. But everybody's dumping their gold and say, well, I don't need to be in defensive, I don't need risk on stock, off stocks. I need risk on stocks now because everything's fine. So I can get my risk off stock gold and all my staples, which are risk off, get rid of all those, and I'm going to risk on. I'm going to start buying all the tech stocks I can because everything is fine. And they are nuts. Don't do that until there's a signed concrete deal with China, and don't get rid of all your gold. Okay, first of all, gold, okay, it's been holding the 50-day moving average. If it breaks the 50-day moving average, okay, and on my chart, if it turns red, and then we'll start selling it short. But I just don't understand where they think that gold is going to keep going down. Yeah, you can get a pullback. There's no question about that because we had all these gaps. And when you get gaps, you get pullbacks. But understand that dumping gold, don't dump all your gold. Keep gold and keep gold stocks, some of them, at least a little bit of it. And don't follow these tourists who are rotating out of these risk-off stocks like gold, and they're purchasing risk-on stock. You got to be nuts. This at a time when the Treasury has increased its borrowing by 317%. Are you nuts? Or $514 billion in just 2 months. Remember, they first came out and said, "Oh, we're going to raise it by $123 billion." $123 billion. They went up to $514 billion, and you're going to get rid of your gold and buy tech? Oh, yeah, we got the tariff deal. That's all done. That's fine now, so that's fine. Well, wait a minute. How about this here, too? If everything's so fine, then when are they going to stop lying, these banks, about their losses? When are they going to stop doing that? The banks are sitting on $500 billion in losses, but they don't have to claim them. They call them unrealized losses. As long as they don't sell the assets, like the bonds, which is killing all the banks now, as long as they hold on, they got enough capital to hold on to their losses in bonds, they don't have to identify they're losing money. No, isn't that crazy? And that's what's going on. And that's just inflation. And again, think about this. China's tariff deal. I mean, it's like, I don't know. I just sit there and I'm listening to everybody today talking about it's a done deal, and it just drives me nuts. And don't forget, I don't care what Powell says. Our GDP is going down. It's shrinking. The first quarter was terrible. And remember, we already had 2 consecutive negative GDP quarters. Remember, it was under Biden. What year was that? 2022. But his right-hand guy came and said, "Oh, no, those aren't solid anymore. We don't use that's old-fashioned. We don't use that." No, it's not old-fashioned. We had a recession. It's not we're going to go into a recession you have to worry about right now, okay? Especially when the government's borrowing or increases their borrowing in 2 months by 317%. We're going to go right smack into stagflation. That's what we have, is stagflation, because we have slow economic growth. I mean, look at our growth, it's negative. Our unemployment's rising. It's increased in 1 year, 205%. They're always lying about the job numbers. And remember, there's no remedy for stagflation. So we don't have the growth, we have high unemployment, and prices are going up. That's not recession, that's stagflation. All we're doing is going to swap recession to stagflation, but nobody wants to talk about it. And I'll get all kinds of hate mail. But anyways, I'll talk about it. Another real top story is the new tax cut. I mean, that tax cut, he's going to give everybody a tax cut, that alone, to sell gold, going into that tax cut, all your gold or your gold stocks is nuts, because that tax cut, even though it's wonderful for people who don't have to pay tax on tips, it's wonderful for the seniors, they don't have to pay on their Social Security, the tax anywhere, which to me was always bad. I never understood that. You pay twice. You work your butt off, and then you get your Social Security. They take taxes out of you when you work, right? And then when you retire and you get your Social Security, they take it out again. I really agree with that deal. But anyways, let's get back to business. So this new tax cut alone is going to increase our debt. It's going to increase our deficits. Think about it. And the Treasury needs to raise $2 trillion to increase, they got to raise that $2 trillion for the increase in debt deficits for 2025. Who the hell's going to buy them? You think China's going to buy our deficits? What are you, nuts? Or Japan? They're not going to, buy our bonds. They're not going to buy our bonds. They're not going to loan to us in return for bonds when there's no rate cuts. And inflation's still climbing, and Powell won't cut rates? Why would they do that? The last time we saw that situation where rates were increasing and Powell wouldn't cut them was when? March of 2023. And it's happening again today. March of 2023, remember? The banks got caught chasing bond yields. I'm going to get these bonds, they're a good deal. Remember? Silicon Valley Bank, First Republic Bank, Signature Bank, all chasing bonds. I got to buy all these bonds, man. Okay, that's a really good deal. And what happened? When minute Powell raised rates to cut inflation down on May, let's see, it was, remember, he raised rates from May 2022, zero rates, 0.77, let's just call it zero, to March 2023, 4.65. So remember, you think of it, it went from 0 to 465 points to fight inflation. So what happened to the banks? Well, all these banks who were loaded with bonds, okay, like Silicon Valley Bank, First Republic, and Signature Bank, they lost all kinds of money on their bonds that they were holding. Because when they go buy all these bonds, as soon as rates go up, you lose the value of your bond. The bond value tanks to raising rates. So the same thing is happening today, but nobody's talking about it. It's amazing what they don't talk about. So the difference today, unlike in 2023, today the banks can mask the losses. The banks have losses of $500 billion. But they continue to mask them. And because they classify them as unrealized. Here's how it works. Think about the banks. So they're losing money on their bond investments, okay, due to rates going up. The losses are $500 billion. I'm talking about now. I'm not talking about going back when Silicon Valley and Signature and First Republic went down. But the same thing's happening right now. So the losses are $500 billion, but they don't have to show them as losses. they can call it unrealized losses. They don't have to realize those losses unless they sell the bonds. Then they have to realize the losses, but not to then. So then they can tell you, hey, look what we made this month, 1.5 billion. No, you didn't. You only made 1 billion. You're lying. So, but the difference was today, Powell's making sure these banks, okay, that are underwater with their bonds, that they don't have to sell them. Remember the 3 banks, they had to sell their bonds. And because you remember, once word gets out, people start rushing to the banks and they want withdrawals of their money. And so when you had those 3 banks, the first one, Silicon Valley Bank, they had to sell their bonds to raise capital. The minute they sold their bonds, word went out all over the place. Okay, they're going down because that's the only way they could give money back to the people. And they couldn't give it all back. The government had to finally come in and pay the people. But my point is, they're doing the same thing right now. Our interest rates keep climbing. They keep climbing. And they climbed this week too. And people say, get rid of gold? And when the banks have 500 billion in losses, but they don't have to realize them because they got Wall Street or they got Powell making sure they're getting enough money, so when people ask for their money, they go to the window. Okay, they don't have to sell their bonds to do it. So this big profit, the big bank profits, are a bunch of BS. It's just all fake. So again, we are in the same situation today with our banks that we were in March of 2023. Now, what's dangerous about all this is that if there's one story that comes out about one bank, like what happened with Silicon Valley Bank, then all of a sudden it was like, it just kept rolling over and over. That could happen to us today. So again, remember, since 2024 to now, losses have increased by, 34%, okay? Or by 118 billion. But they're unrealized, though. We have to realize it. We don't have to tell anybody that. It's just insane what's going on. So to think about selling your gold, keep some of it. Now remember, we know how to short. So if you look at my chart right here, if we break the 200-day moving average right here. Now remember, we bought our gold back here when our chart went from red to green, okay? But look how tight it was. There was no gaps. And then as soon as they started to gap up, I told you this yesterday, I had my members, I told them, hey, I'm going to gap up, keep selling into it. Keep selling it, sell your gold stocks to the tourists who don't know what the hell they're doing, okay? Who are getting out of gold today. And then she pulled back, just like we said. I said, it's going to back and fill, and it did. Then it rallied again. I said, same thing, sell into it, and it's going to back and fill, and it did. Now it's at the 50-day moving average. So now what they may do is they usually will drop it right below the 50-day moving average, the market makers, okay, to get everybody to panic and start dumping their gold bond, their gold, right, stocks. And so then the market maker can go and start buying it, okay? So my guess is it's going to drop through that 50-day moving average at first. There's going to be a panic, and then the market makers are going to go and buy all the gold stocks at a big discount. I just don't see how gold is not going to continue to rally when we got all these problems, especially with the debt, the deficits. They're not going to be able to raise all kinds of money like they think. Hey, I'll be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
In my radio show and podcast, I apologize on the opening. I do every day for 15 minutes on Instagram. Done it? Yeah, it's Instagram. Where I take a break from trading, and so then I just come on the air for about 15, 20 minutes, and I just every day, and I just talk about what's on my mind. There's no preparation, and people can ask me questions, and we have a lot of fun doing that. So that's where I thought we were. I forgot this was my Friday radio show. And so I asked you, so if you want to ask questions, you can ask, well, you can't. So what you can do, though, is email Steve. If you have a question, I'll be happy to answer it, okay? So this is not our 15-minute Instagram little get-together we do every day. You should join that. It's a lot of fun, and you can ask questions. But go ahead and email Steve if you have any questions, and I'll take care of them. Okay, so let's get back to this craziness of selling gold. I think you got to be nuts to get rid of your gold or get rid of your gold stocks completely, okay? I do think if they break the 50-day moving average, we're going to have an opportunity to buy some more at a lower price, okay? But let's talk about, what's going on here is really nuts. These tourist traders, they all got caught chasing the tech stocks, okay? In a high rate environment, you don't do that, okay? But they don't know any different. And so when interest rates are up, that's not good for tech stocks. So what you're starting to see is a lot of back and fill. If you take a look at Amazon here, for example, they chased Amazon. Look at the big gap up. Now they're going to get their money back. See, it's going to back and fill. They did the same thing in the April 2009 rally, remember? Back and fill. So, and take a look at Microsoft. Now, how many people bought Microsoft? You watch what happens with Microsoft. That's going to back and fill, okay? Because this craziness where everybody's jumping in, thinking the tariff problems are over. Let's say it was. Well, what are we going to do about our debt? What are we going to do about our deficits? The tax cut alone is going to be huge. That we need. They need to borrow $2 trillion, the Treasury, to cover all the stuff that's going on. Then they can't raise that from China or even Japan. Not with our interest rates going up. Who the hell wants bonds, right? So it's going to be tough. But again, the tech stocks are a high rate environment. And investors are jumping in these stocks left and right the other day. And if you look at, for example, let me find one more here. The only, like Apple, look even Apple. See, Apple had that gap right there, that even though it's a small gap, see how it's not going anywhere? Because most of the time they'll back and fill these. You got to be very, very careful, all right? And as I said, now GEV is one we own. Now see the difference? I had my members in this because there was no gaps, okay, no big gaps. Look at that compared to Microsoft. So what you need to be buying now is stay away from the gaps and try to find stocks, okay, that you have like GEV that has a nice, nice tight pattern. That's what you want. You don't want these gaps because you're going to get killed in these gaps, all right? I mean, just one little announcement that China may not sign a deal, and you're going to hear that this eventually was going to happen. This was a letter of intent. Anybody will sign a letter of intent because it doesn't bind you. And they took this letter of intent, and nobody like Trump, okay? I mean, he's a marketer. He can sell anything to anybody. And that's why we got that 1,000-point rally. I mean, he really made people feel like this thing is, hey, we're all done now. No, we're not. So chasing these tech stocks are not a good idea. And so now they're starting to rotate. The smart money's starting to rotate and figure, hey, I better be out of these. I'm going to rotate into bank stocks. Now, bank stocks, as I said earlier, have the same problem that Silicon Valley Bank, First Republic, and Signature had, okay? But the difference is that they have the ability, when Powell raised rates from 0 or 0.77, you might as well call it 0, in May of 2023, to 4.65, which is just, we're a little higher than that now, aren't we, in a 10-year? I think we are. No, we're a little lower in a 10-year. We're at 4.44. So we're lower now, a little bit, not by much. So the same thing could happen to us right now. All these banks are sitting there, and they got a real problem. And if there's one little story comes out, you watch these banks start tanking. But in the meantime, if you're going to buy bank stocks, because that's where all the money's been going in the last 2 days, we bought, but remember, when we bought our bank stocks, we bought them early. See, that's what people don't do. They don't execute at the right time. I'll give you an example. Take Goldman Sachs. Here's one of our stocks, okay? Now, my chart, when I design, really helps you because it will tell you when money's going in and money's going out. And even though it's going up, the red is telling you there's not enough money coming in to sustain it. Be careful. Wait till it turns green. Then when it turns green, then they confirm, okay, there's enough money, you're not going to get hurt, okay? But if you buy it when it's going up and it's red, the next morning, let's say you bought it at $500, the next morning you can wake up and it's at $420. But as soon as it turns from red to green, you're in good shape, especially if you have what we call the sweet spot. And that's what we have here. But even that little gap can be backed and filled. But right now, people are getting away from tech and they're jumping back into these banks. So J.P. Morgan, that's been doing, but the trick again with J.P. Morgan, look where we bought it. We bought it right here. That's where we teach our members, we train them. We train them to stay with just 6 stocks, number one. Because if you stay with just 6 stocks, you're always going to find the execution point, where you should execute. Because stocks form patterns, buy signals. And if you're running around and listening to this jibber jabber and that jibber jabber on TV, you listen to Payne, you listen to Crazy Jim, and you listen to all these other people, by the time they tell you to buy a certain stock, they've already been in it 3-4 months, okay? And so their job is to get you to buy it so Wall Street can get out of it, or their institutions that they take care of, right? So you gotta, and that's why I built these charts 25 years ago. And over 225,000 people use these charts over that 25 years, so it works. But look, see, you got a beautiful setup. There's your low right there. See that stochastic? You line that up, and the minute it turns green from red, you buy. And look at that nice little move we had right there. Now we're going to keep our stop in. And by the way, when we bought, as we were going up, making money, we were taking profits, putting in our pocket, taking profits, because you got to sell into these rallies. Know what this is, and nobody realizes what's going on. This big rally, the 1,000 points, that's called a short squeeze, okay? What it is that the institutions, what they're going to do is they know that they got these tourists. So anybody that's short, the institution's going to squeeze them. The institution will go in and they'll buy just enough shares that the guy who shorted gets scared because the stock starts going up. So if you shorted a stock at 10 and now it's at 15 because you have the institutions going in buying, squeezing you, he's sitting here at 10, all of a sudden the stock's at 15, he's taking some big losses. So what he'll do is sell his stock, okay? Now, what happens is you dump, right? So when he shorts that stock, he's got to remember, he's got to buy it back. When you sell short, you got to buy that stock back. So it moves it up. And then the market maker comes squeeze them again. And then that's what happens. It's a squeeze. And so between the market makers and their squeezing, and then you got the tourists jumping and seeing the stocks going up, they don't understand it's a squeeze. Okay, it's a short squeeze rally where the big boys are in there and they're purchasing shares of these heavily shorted stocks and forces the shorts to cover. They don't understand that. All they see is it's going up. I better get in at 210 before it goes to 211. So that's a lot of this rally is the point I'm trying to get across. This has been a big, short squeeze rally. And why would the institutions do that? Because the institutions bought these stocks a long time ago. Now they want to get out. So if they can create an illusion that the market's going up by squeezing you who are shorting by buying some shares, and you get scared, you see it going up, then you dump, right? And you have to buy your shares back. And then all of a sudden the tourists are sitting there, look at that, stock's going up, I better get in. So that's all this rally is. Because remember, we have a problem. Our first quarter GDP was negative. And here you have this idiot, Powell, telling us this.
Look at where we are today. We have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid.
Growing at a solid clip? GDP? It's negative. It's negative. First quarter was negative. You got to be kidding me. And even worse, people don't give enough credit to consumer confidence. You know, consumer confidence is what drives stocks. That's right. If the consumer has confidence, now how does he get his confidence? Well, it used to be where every time the market started pulling back, that's why we never had big pullbacks for 15 years. The Fed, as soon as it started to pull back, they'd increase the money supply, right? Treasury would print money, give it to the Fed would give it to the banks would then lend it out, and people would start buying stuff, and so they got to keep that consumer confidence up by continuing to pack the banks with new money so the banks will keep loaning, okay? So people go out and use their credit cards and everything else, keep buying to try to keep pushing the economy up. It's called a bubble. They create a bubble. That's what's going on. So it's amazing, okay, that people just don't. I just wish these jibber jabbers on TV would tell you the truth, but they won't. So, and then housing values are really bad. He's saying what a great economy. If you look through what? I wonder what he's talking about. Look through, what the hell's he looking through?
Look at where we are today.
Yeah.
We have an economy that, if you look through,
what?
The sort of distortions in
You mean look through the BS that you throw out there and the people on Wall Street and on these financial shows? That's what he must be talking about, because I don't see it. Because if you got a first quarter GDP that's negative, we know we're going to get a second one. You got housing. And remember this, the market's never good until you get housing starts. When you get housing starts, That's when you know the economy is doing well. That's the only time the economy does well, when you got housing starts blasting off. So we got a GDP that's negative, housing values in the 10 most desirable states, like Florida, where I live, they have dropped nearly 20%, 17 to 20%, depending where you live. Now, we're talking about 17, 20% drop in value in the 10 most desirable states. And now deficits, okay, Congress is running deficits, and they're spending more money than they're taking in to stimulate an illusion of a good economy. That's what he's talking about. See, what they do is this. They spend money they don't have, and they'll spend it on the welfare state. They'll spend it on the war in Ukraine. They'll spend it on infrastructure projects, new airports, new bus stations, green energy, woke. And it's to give everybody a sugar high, okay? Give everybody a sugar high. And that's what this last rally, 1,000-point rally, was, just a sugar high. And everybody's going to get screwed, believe me, who bought on the high rather than doing what we did, follow our buy signals on our Pro 2 chart. When it turned green, we bought right at the low. So what happened is, when all of a sudden, here's a great example. Take J.P. Morgan. We own J.P. Morgan, okay? J.P. Morgan, when it was around, I think, April 24th. I have to look it up, but it's pretty close. So we bought that around 239. We were already in it from 239 Monday. Remember, we had that rally. It went to 262. But we already bought it. We already bought it near 227. So on Monday, when it went to 260, you sell into it to take the profits. People won't do that. Look, join my gang. It's free for 10 days, okay? Go to philsgang.com. All right, see you on the chart.
With your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.